Today we're going to talk about a very fun case study that involves Electronic Arts and their recent game Apex Legends, and how it illustrates that the efficient market hypothesis is bogus. It's important for me to emphasize that this is an opinion, it is not a statement of fact. I cannot disprove the efficient market hypothesis. However, what I can do is show you one of literally millions of different examples that go against it. If you don't know what the efficient market hypothesis is, it simply states that all stock prices reflect all available information, and therefore consistent alpha generation is not possible. Now, if you're not familiar with financial terminology, that probably didn't make a lot of sense, so let me simplify it even further. Let's say you have intimate knowledge of the automobile industry. Maybe you work there for a while, you know somebody that works there, and you talk to them often. And for whatever reason, you think GM is going to do well over the next couple of quarters. Maybe you think they're going to sell more vehicles. Maybe you think that interest rates will go down and that prefers GM's financing options over some of the other companies that are out there. But for whatever reason, you think they're going to do well. And you feel that the market doesn't appreciate this opportunity that you see. And as a result, you decide, all right, let me go ahead and pick up some shares of GM. And hopefully over the next couple of financial quarters, the market will be surprised by how well they perform and stock price will go up and reflect what I think it should be at in the first place. According to the efficient market hypothesis, your reasoning is flawed. The reason that the efficient market hypothesis disagrees with this approach is because, according to this hypothesis, stocks already reflect, so GM in this case, already reflects all of the information that you're basing your research on. In other words, GM is already trading at its fair value, and it is impossible for you to identify it as being undervalued or overvalued. In other words, let's simplify it even further. This means literally any person that picks individual stocks to go into their portfolio, so that would be portfolio managers, that would be stockbrokers, that would be financial advisors, that would, well, a decent section of financial advisors at least. That would be Warren Buffett, that might be your grandma that picks individual stocks. Whoever it is, they have an incorrect approach. It would be better for them to just invest in the market as a whole, so that's the S&P 500 or a whole market fund, because they are not going to be able to consistently beat the market, but they can at least get the same return as the market if they own the market, right? That's the idea, that's the principle behind the efficient market hypothesis. It's very well supported in the academic world, obviously not as well supported in the practical world because it would put a ton of people out of their jobs if it was actually true. In this video, I hope to show you one example of why I think it's not true. So on February 4th, EA released the game called Apex Legends. It is a free-to-play battle royale game. It goes in the battle royale genre, which has been very popular recently. I'm assuming a reasonable portion of you are familiar with it, given the demographic of my YouTube channel. But if you're not familiar with it, the game was released with very little marketing, very little pre-marketing is what I should say. They did the majority of their marketing after launch. After their sponsorship started to run out. And it's important to realize, if you're not familiar with Twitch, it's one of the biggest gaming websites in the world. In fact, it's just one of the biggest websites in the world, period. And it is, I think at this point in time, probably the biggest source of free marketing that these video games get. It is, I would say, hundreds of millions of dollars that people for free, right? For free. So I think this is very big when a game gets to the top here, especially for an extended period of time. It was over Fortnite, it was over League of Legends, it was over Dota, Counter-Strike, all those different games that are big. It was doing better than those games. In fact, even to this day, it is still the third biggest game on Twitch currently. The reason I bring this up is because not only is it a ton of free marketing, again, we're not talking thousands of dollars, we're talking millions of dollars of free marketing. I don't think the majority of people that are following EA's stock are intimately knowledgeable about the inner workings of Twitch. I really don't. You know, I think about somebody that's between the ages of 60 and 70 that's managing a pension fund that owns EA, they're probably not too knowledgeable about the day in and day out of Twitch. And the reason this is important is because Apex Legends here, it launched on February 4th. We have new technology on the channel now. We have this pen, although unfortunately it seems I set the stroke to be a little bit too large. We're just going to have to deal with it for now. I'll just make a dot. This is where it launched, and you can see there was a coincidence here. EA reported their earnings the following day, and maybe this wasn't a coincidence. Maybe they did this on purpose. This particular earnings was not good for EA. It's important for you to realize that when it comes to earnings, believe it or not, the actual earnings and the actual revenue gets reported for the quarter is not as important as the guidance. And what happened here is they missed on their guidance pretty significantly. Previously, the estimate was 1.75 billion, and that went down all the way to 1.17 billion. So in other words, analysts thought that they were going to have net bookings of 1.75 billion for Q4, and instead it's guided to be 1.17. That is a very, very, very significant miss. And given that guidance is more important than the actual reported earnings, the stock price went down by a lot. And that's this huge drop that we see right here. Okay, this huge drop. That is the result of that misguidance. But a lot of investors missed the fact that in the earnings transcript, they said that they did not model material net bookings for Apex Legends in the quarter. And the reason that this is important is because in the same earnings transcript, they mentioned that they had 600,000 peak concurrent users after only 1 day of the game being launched. Now recall, the game has almost no pre-marketing. It's all post-marketing, which means that there's a lot more growth opportunity to come, given that, again, there wasn't a lot of pre-orders. Well, it's a free-to-play game, so it can't get pre-ordered, but people were not hyped about this game too much before it came out. All the hype came out after it, and as a result, we're at the very beginning of the hype cycle. And in fact, we know at this point, now that it's a month and a half later, that they would reach, I think, like 3 million or 4 million concurrent players. That is absurd. It is actually completely absurd because, again, most gamers, they see this number, and the first place they go is a website called Steam Charts, where you can see the most popular games on the publishing platform Steam. It is not the only video game publishing platform. In fact, it misses out on the biggest games like Fortnite, League of Legends, any Blizzard game, so on and so forth. But it does have some of the biggest games out there in existence. And you can see that 600,000 concurrent players would actually put it, as of right now, this second, at the second largest game on the platform. When you look at these big games here, these multi-100,000 concurrent player count games, you start dealing with the B word. Do you know what the B word is when it comes to the stock market? Billions. And when investors hear billions, their ears start to perk up. I think what happened when a lot of investors were listening to this earnings call is they weren't able to instantly translate this concurrent player count into a dollar number. So they focused on what was important to them, which was the guidance miss. Because, again, guidance is what's going to happen with the stock moving forward. And when we invest in stocks, we really just care about the future of that stock. So when we see the future isn't going to do as well, we typically punish the stock by having the price go down. The thing that was a little bit different this time, there was two things really. One is that obviously Apex Legends was massive, so it is something that could make a very big difference. And the second thing is that they didn't model Apex Legends into their net booking guidance. And as a result of that, they were seriously underestimating what they could do in the future. If we look at the actual stock price, you can see that if we kind of have a timeline here, Tuesday was around here. This is about when Apex Legends, or rather Monday. This is when Apex Legends launched, so this was a Monday. This was the Tuesday. So Tuesday after the launch of Apex Legends, everybody's excited. It seems to be doing well. It doesn't go up by a ton, but it does go up by a little bit. And then this is Wednesday because they reported after hours. This was a horrible day. Earnings, or rather guidance, was horrible. The stock plummets from, I believe, $93 a share all the way down to $78 a share, which, by the way, when we talk about large cap stocks, in fact, if we talk about any stock, double-digit declines or even increases are very drastic moves, but especially for large caps because these are multi-billion-dollar moves in market cap. So this was a massive move that we saw here. It made headlines everywhere because of the fact that it was so drastic. The following day, this is Thursday, the stock does very well as people start to realize, hold on, maybe Apex Legends is picking up on something big here. And then we started seeing some of the sell side, how high it was. It was literally ranked #1, the concurrent player count. They compare it to some of the other games that, again, are dealing with the B word of billions. So Friday is a very, very, very good day. We see the price fully recover from this decline post-earnings. And as the days start to go on, we actually see it come all the way up to a high here of $107 from a low of $78. That's an increase of over 30% in just a few days. If you think that the stock markets are efficient, or if you think they were efficient in this case, I got another thing coming for you, because there is absolutely no way you can argue that the market was efficient in handling this particular scenario. And again, this is only one of many. I will say that this is probably one of the cleanest ones I've seen in a very long time that goes against the efficient market hypothesis. And this was actually a trade I actually participated in. I did not, unfortunately, get to capture the full amount. I sold half of my position at 95 after buying it at $79 because I bought it right at the opening when I saw that this earnings miss happened, because I knew the stock was going to get punished. Everything ended up working out. I may not have made the maximum amount of money possible, but I did make a decent amount. I think this is more than enough evidence to see why markets aren't quite the efficient system or machine that some textbooks make them out to be. And I hope this was kind of an interesting case study for you all as well. Again, it's kind of an interesting industry, gaming. I think a lot of you probably do that based off of the demographics of this channel. But even if you don't, I think you can appreciate this type of story. So I hope you guys enjoyed watching this video. I hope you learned something, and I will see you next time.